Good day, Team GCI. I'm Brad, and in today's GCI Market Outlook, let's take a look at Forex trading on gold, silver, dollar yen, Kiwi Swiss, and dollar Swiss. In our last video, we spent a lot of time looking at the economic calendar and all the central bank interest rate decisions. Let's look at what happened and why. Before we get into it, don't forget to like, follow, and subscribe, and feel free to leave a comment on what you would like to see in future videos. The big surprise was the Swiss National Bank lowering interest rates from 1.75% to 1.5%. You can see what happened as the Swiss franc suddenly went very weak. Unfortunately for traders, most of the moves went with the current trend, so unless you were already long on dollar Swiss, for example, it gets a bit tricky. The idea now is to look for a reversal or where price action went against the trend. For example, Kiwi Swiss was already in a slight downtrend when the news was released and price action has bounced off resistance. Before going short, however, look for confirmation on lower time frames. The U.S. Federal Reserve did not change its rate, but at the press conference afterward, Jerome Powell made it quite clear that they would this year. This sent the U.S. dollar lower very quickly, but in many cases against the trend, giving us price action reversals to trade with the trend. For example, an Aussie dollar with the stochastic oscillator showing very overbought. By the way, the Reserve Bank of Australia kept their interest rate the same as well. Similarly, on Kiwi dollar, Euro dollar, and Pound dollar as well. The Bank of Japan raised its interest rates above 0% finally, but the yen got weaker as the talk of low growth and high debt did not help. If you saw Monday's video, we pointed out a pullback on the bull run on silver, and the weaker US dollar helped it on its way. If we zoom into the 1-hour chart, we can see one of our favorite chart patterns, the falling wedge, and its bullish nature showed with this big jump in price. Moving out to the weekly chart, we see that price action is near resistance and the stochastic oscillator is heading into overbought territory, so we may be looking at a reversal soon. We have the same situation on gold, but prices are at historically high levels, and analysts feel that it may go higher as well as a safe haven asset. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.